Hi, Vanessa, can you hear me?
Yes.
Awesome. Good morning. How are you?
Good morning. I'm good. How are you?
Pretty good. Thanks for asking. I hear an echo. Let me just see this. Vanessa, what office are you with?
I'm here in the Tampa office.
Nice, Tampa.
Mm.
I don't know why I can't figure it out, but I hear an echo. Do you hear an echo when I speak?
No.
No? Did we met on Tampa or no?
I'm sorry.
Did we met in Tampa on your grand opening?
I believe so. When we
Yeah.
did the grand opening. Yes.
Too much fun.
Yes.
How's Tampa doing? Are you guys initiating sales meetings already?
I hadn't been in the office in a few weeks. My daughter she's been sick and looks like she may have to go on like a donors list or dialysis. So I've been dealing with that.
Oh, I'm very sorry to hear. Praying
Yeah.
over your family, hoping everything goes well.
I know it's been a tough time.
Yeah. How old is she?
She's doing a little better now. It's been more
Okay,
stressful on me because I just buried a son 4 years ago. So it's been tough.
of course. How old is she? How old is your daughter?
She's 29.
29?
Yeah, it's been ongoing, but it's getting worse as she gets older. So this has been pretty much started since she was 13, but now it's gotten
Oh,
to the
wow.
point to where she's having a lot more difficulties with it.
Yeah, must be bad.
Mm.
Are you from Tampa?
Not originally, but I've been here since like 2011.
Oh, wow. Okay. That's almost going on 12 years now.
Yes.
Okay. You like it?
Yes, love it. I've been back
Yeah.
and forth because my dad was here since I was like 2. So I was always back and forth. I knew I would come here. So after finishing high school and everything, I came at first and went back, and then I came and stayed in 2011.
Okay. And is real estate your full time or is it part time?
It's part-time. I'm looking to go over to making it full-time.
Right. Good.
Yeah.
And what do you do when you're full time?
I'm a fraud management.
Product management? Where?
Yeah. PSCU. The office is based out of St. Pete. So I work on the backside of credit unions when they report fraud or anything on their credit cards and debit cards. That's what I
Okay.
do.
Nice. Okay. And how long have you been with them?
This company a year now is with a company before this. And this one called me while I was working for the other one. They had better opportunities. So I came here.
Yeah, your opportunity calls and you answer.
Yes.
And what about before? Like, what's your background predominantly?
Predominantly, I was in medical field. I did that for over 20 years. But
Nice.
I had 2 knee surgeries, and after the second knee surgery, the walking wasn't there anymore. So I started
A
doing it.
lot
I'd
of
gone to
walking
school.
in.
Yeah, I had the criminal justice degree before, but I never used it. And I'm glad I went to school for it because it was there for me to fall back on and do this.
That's awesome. And then your family in Tampa, outside of your daughter, of course.
Yes, I
Yeah.
have 3 sons here, my mom, my dad, all of my sisters, brothers, nieces, nephews, the whole family.
Nice. That's awesome. Very excited for what Tampa is going to be doing in the next, 12 months, 24 months, 36 months, and so forth. You guys have a phenomenal leader.
Hmm.
Lot to learn from an individual. I always believe that in proximity and sales is everything. Like if you have
Yes.
somebody, doing it, modeling it for you and willing to teach you, like that's the best thing that you can have in sales.
Hmm.
And I'm looking forward to see you guys, thrive through the waves. I'm gonna be in Tampa, by the way, on Friday the 21st.
Okay,
I'm gonna stop by, do a little training live. My trainings are very unprepared in the sense that I don't like to use PDFs. I like real stuff, I like to do one-on-ones real with agents. I wanna, pick your brain, see what's working, what's not working, and help you get better.
okay,
I think in this business as a lender, like if you just focus on numbers and the technicalities of building loans, that's not where the majority of the money is at. In this business, the money is out in building relationships. So if we can pour into our agents to help you guys to strike more conversations, to fill up the pipeline and help you guys funneling that pipeline, you have enough inventory to go through the years, and you remove that pressure of, always constantly worrying about one deal. So I'm
exactly.
excited for you guys. So I'm gonna be in Tampa the 21st. Hope I can, see you again,
Okay,
since the
yes.
opening was too much fun. All right. Good
Yes, I
morning,
look
guys.
forward to that.
Absolutely. Good morning, Liancy. Good morning, Eric. How you guys doing? I would like for you guys to get a little bit uncomfortable. If you guys,
Good
can turn on
morning.
your good morning, good morning. Turn on your cameras. My trainings are not monotones. I like to give agents the opportunity to participate. That's why I love Zooms. Nothing, nothing wrong to say about your lifestyle app. It's a phenomenal app, but the ability to interact with each other is where it's at in this training. So that way, we're here to help each other, to sharpen each other. And hopefully by the end of this call, you guys, can learn one or two things that can really help you and your upcoming days on your career, if that makes sense. So guys, if you guys can hear me, please unmute yourself, just greet me. And if you guys have a camera, please turn on the camera. So we're all gonna get uncomfortable. We're about to get ready, guys.
Good morning, Jonathan.
Good
Yes, we
morning,
hear
good
you.
morning. Hey, how are you?
Great, thank you.
Awesome, awesome. Happy to see you here.
Thanks.
Eric, can you hear me, Eric? Eric, you can hear me? Liancy?
I can hear you.
Awesome, awesome. So you guys don't have a camera? Come on, guys, get uncomfortable with me.
Actually,
This is
I'm
very
working.
uncomfortable.
I'm working right now, so I'm
Okay,
just
okay.
need to
I'll give
listen.
I'll give you a free pass because you're working, okay?
Thank you.
All right, guys. Small crowd today. This was completely out of the schedule. Our Prequa calls, our trainings are usually every Wednesday. Buy City Lending is definitely on your calendar, in the Lifestyle app, for Wednesdays, 10 a.m. For those that don't know me, my name is Jonathan Perea. I'm a loan officer, a mortgage advisor with PRNG. PRMG is the bank that we actually represent. Direct lender, been in business for 20 plus years. Our operations, it starts with our branch manager, been in this business for 18 years, started when he was 17. So you do the math on that. And our operations manager and all of our team on the back end, they will have, plenty of experience in this business, which is very crucial when you guys are picking a lender. The name of our team is By City Lending. We decided to brand ourselves, which is something that we're very big on preaching you guys, because Lifestyle is a great, phenomenal platform, and take advantage of all the resources, the leadership, the ability of you thrive in this business, but you always want to brand you, right? And your business. So same model here. PRMG is a great bank, great lender. Been in business for 20 plus years, over 300 plus branches. But like everything in business, when businesses is scale, you want to make sure that the people like you, trust you, and do business because of you, not because of a name, right? So it's the same thing with our team. Buy City Lending is conformed by 4 individuals, myself as one of the loan officers, my best friend and business partner, Dario Gonzalez, which I don't know if you guys met him, but I'm sure that you guys will. If you guys go to any event, any office, any training, we do our best to be, you know, to get in the trenches with you guys. We go to open houses, we do calls for you guys. You name it. We're really committed to the mission to help our agents to grow and to strive. We have another loan officer, which is kind of like takes care of the back end of the sales process on lending, which is, you know, structuring the loans and being creative, being a solution maker, not letting a loan die until it's completely dead and you cannot rehab that loan. Name is Beatriz Arteaga, plenty of experience as well. And then my rock, my end backbone, my life partner and our junior processor, Jennifer Montoya, which is part of our picture. So that's basically it, a little bit of introduction about who we really represent, who we are as a team. And I wanna pause real quick to see if you guys have any questions before we start our pre-qual training. Any questions? Or we good? All right, so with that said, we very big on pre-qualification. Just like the name of a training, we really last year Daryl and I, you know, been best friends for 10 years, and out of those 10 years, we have worked together 10 years. So we're going for our 11-year working together, and we're very passionate about building relationships, holding those relationships as much as you can. Life is like a carousel, right? Some people come in, some people go out, but we're being very consistent in the people business by, you know, learning stories, picking brains of individuals who are doing things that are working for them in their careers. And specifically speaking about you guys in real estate, you know, last year we spoke with a lot of realtors. You know, we saw the good, the great, the bad, and the ugly. And we found a common denominator on top producers. And for us, top producer is somebody that's producing on the consistent basis, not just 1 year and then disappear, they come back. They're very consistent and they double digits as an individual producers, $10-20 million a year. They all have one common denominator. You know, this has nothing to do with, you know, the good, bad individuals. They just have we found one very common denominator, which is the ability to pre-qualify the prospects, whether you're working with a buyer, seller, or rental. They have the ability to understand finances at a very high level, so that way they can better guide their clients, right? So we come out with this idea at the end of the quarter last year, where we're going to be doing pre-qual calls and pre-qual trainings, because it's just the ability for us to pour into you guys with the idea or the goal to strike more conversations, to fill up your pipeline, and that you can have enough people that you can talk to that can refer you business, because that's the goal, having a referral business, right? So when it comes to working with buyers specifically, right, because as a lenders, we want to make sure that when you're working with buyers, you really understand if this person or this individual is ready to buy with you, knowing that there's 3 common things that you got to find out about them before you even discuss finances, right? Are they ready, willing, and able, right? Some of you guys probably remember on your real estate class, that's one of the main topics when they talk about buyers, right? Ready, willing, and able. So we can understand if they're going to be ready, willing, and able to go through the process with home financing, and if they're going to buy in the next 60 days. And if they're not, how are we going to, you know, funnel those prospects so we can use them as an opportunity to continue to pour into them, build relationships that can lead you into a referral business, because that individual has a market that unless we provide the value up front and we ask the right questions, we're never going to tap in the market, if that makes sense. Okay. So another quick stop, guys. Do you guys have any questions so far? Is everything crystal clear? Guys, give me something on the chat or unmute yourself and let me know that everybody's with me on the call.
Yes.
Awesome. Thank you, Vanessa. Thank you. So three main pillars when it comes to working with a buyer, right? So the three main things that a lender looks for is income, right? Does this person has the income to be able to carry on a mortgage? And can this income be demonstrated? And what is the likelihood of this person to continue to receive income, right? When a lender is actually lending money to buy a home, you obviously, if you were lending money, I would like to know those two things, and I hope you guys do, right? That's basically as far as income. And then the next one is credit, which credit brings up two things, right? You have your credit score, right? Which is kind of like your scorecard, right? For those that, probably remember school, I was terrible at school, by the way. But it's kind of like your scorecard, right? Like it demonstrates the ability for you to actually pay your things on time and not being thrown to collections or charge off from things of that nature. That is your credit score. And the other thing is your credit liabilities, right? Credit liabilities, a lot of us think that credit liabilities are your living expenses. One thing is your living expenses. The other one is just your debt, things that you have been putting on credit, perhaps. So those things are credit cards, lines of credits, personal loans, business loans, auto loans, whether it's a finance vehicle or whether it's a lease vehicle, and it's student loans, right? Those are things that comes up on your credit as how much you owe and what's your monthly payment. And then the last one is assets, which for those that probably been here in this training quite sometimes, I always say the same thing because to me it's just a fancy word for savings, right? So how does that really work into play when you're speaking with somebody, right? Income is an opportunity for you to actually understand what do they do for a living and what is the background of that individual. Are they new in the workflow? Have they worked in this industry for a long period of time? Is this person consistent, right? Does this person is working in something that they like and then they enjoy, right? It's an opportunity to strike conversations. I hear a lot of feedback from a lot of agents that feel like income and credit and savings is it's a very intrusive conversation with a prospect, and they rather refer that to a lender because they don't want to get involved. Although we love to help you guys, and if that's your style, by all means, we'll love to help. The common denominator of a top producer is knowing and understanding when is somebody ready, willing, and able. And if they're gonna finance a home, they want to know that on front so they can maximize their efforts and maximize their time working their pipeline, right? Whenever you see the other, spectrum is, you're gonna hear, agents complaining or in a sense crying out the fact that their things are not working. And then once we find out and ask more questions, we really understand that we put in the time and the wrong individual while maybe another prospect that you have that is ready, willing, and able, and they're, by asking a couple of questions about the setup format as income, credit, and assets, you can really help them to accomplish their goal, because by providing the information in front and understanding where they are, you can let them, you can walk with them in that path a little better, right? So it's much smooth transition. So going back into income give us two different type of individuals, right? One individual is a W-2 employee, and the other one is a self-employed / business owner. The only thing that we want to make sure that you guys understand is just a little mathematical formula. So if you guys have the ability to take notes, I hope you guys are taking notes. Like I said, my goal at the end of this call is for you guys to take one or two things that you guys can implement, and it lead you into more conversations, building more relationships, so that way you can go through the scenarios of income, credit, and assets, and a big spectrum, right? And a big quantity in a short period of time, because that's how we're gonna learn, right? So the formula is very simple. When we're speaking with somebody, we also do pre-qualification calls, right? There's a difference between pre-qualifying somebody and pre-approving somebody. Pre-qualifying somebody is what we're gonna do right now, which is basically having a common understanding of what does this individual, do for a living, how much more or less they get paid a year. Because if you ask those questions in a very high level and you're getting answers in a very high level as well, it should give you a common ground to start the conversation about home financing, right? So how does that look like? You're having a conversation, you break the ice, You know that, this person is not buying cash, and this person is, their lease is up in the next 3 months, right? That's a very key element to working with buyers, right? Am I going to be working with somebody who's really shopping to buy a home? Or am I working with somebody that is window shopper and they just basically want to experience, they want to know information, they want to go through the process of home financing, but then they're not really making the decision that they want to buy, right? So you're having a conversation, now you determine that they really are going to go through the process, ready, willing, and able to start the process of the home financing. I will ask, what do you do for a living, right? What's your profession? How long have you been there, right? We're always looking for how long have you been there, because you got to have a 2 years of work history for most of the loan programs, right? There are some exceptions, and then anything that becomes exceptions or create critical thinking when it comes to financing, I hope you guys are working with a lender that can be, number one, available 24/7. And when we say 24/7, is if they're not returning a call within an hour, I will question that relationship, right? Because that's a very key element on your relationship between a lender and a realtor, right? Especially when somebody is new, or they're not really used to financing, right? Home financing. You want to have a team that can really answer your call, answer your text message, so that way you sharpening your skills, right? So the 2 years have some exceptions. We're not going to go too much into the weeds with the exceptions. Let us handle that pressure. Let us handle that job, right? So I will say 2 years. Okay, so you work in this place for over 2 years, checkbox, right? How much money you will say, how much money a year you think you make, right? More or less, just so I can give you an idea, what is your purchasing power? More or less, what would you say you make a year, right? So I'm giving the explanation up front, which is a very good strategy when you're asking questions. If I give you the explanation of why I'm asking what I'm asking, and then I ask the question, now automatically, we're not going to question why they're asking you. That's for the most part, right? Somebody that is really ready, willing, and able, right? So if they say, well, 50,000 or 60,000, 100,000, right? We're going to use an even number. Let's just say they say 50,000, right? Which is considered, low median income, right? Now automatically I should be thinking that if this individual is looking to buy a home, right? A single family home, $50,000 is relatively a low income. Normally I'll ask if somebody else, if it's necessary, right? I want to be able to help you, guide you in this process if it's necessary, and it can help you to qualify for the house that you're looking for. Do we have anybody else that we can add into the application for home financing? Why is that? Obviously, the more income, keeping in mind that you got to have a balance with your personal liabilities. The more income you have in an application, well, the more you're able to borrow, the more that you're able to get pre-approved for, right? And then just a quick side note, you can have up to 4 individuals in a mortgage application. All right, you guys with me so far?
Yes.
Yes.
Awesome. Awesome. Thank you. So you can have up to 4 individuals in a mortgage loan application, right? So what is the formula? Let's just say married couple, both combined income, $120,000. So you're gonna grab the yearly income, $120,000, and I'm gonna type it here in the chat. 120K annual income. Okay. So you have 120K annual income, combined income, husband and wife, right? Automatically, you're gonna split that income in half. Why is that? Because bank lends you over 50% of your annual income. Right? So you're gonna grab that 120, you're gonna split it in half. This leaves you with 60K income. And then nobody pays mortgages, for the most part, nobody pays mortgages on front a year, right? Same as rent. For the most part, people pay their rent how often? Monthly, right? So mortgage is the same. So you're gonna split that in 12, because there's 12 months in a year. So 60K a year divided by 12 months, right? And that will give you a 5,000 a month income, right? That is the income that we can use to help qualify in this married couple, right? Now, out of those $5,000, I will educate them and say, hey, banks don't really lend you over 100% of your income. You know why? Most people say, no, I don't know why. So it's an opportunity for you to demonstrate value to them by providing them valuable information that everybody should know. It's not, rocket science. Can we all agree that it's not rocket science, right? Simple, very math, right? So $5,000 is how much you can actually, lend on for a mortgage payment, right? Minus your credit liabilities. So this $5,000 is assuming that they have no debt, no credit cards, no student loans, no personal loans, no lines of credits. So I would typically say this is the money that you can actually use to qualify for a mortgage minus your credit liabilities. Some of those credit liabilities are credit cards, student loans, auto loans, personal loans, business loans. Do you guys have any of that at this moment, right? Oh yeah, more or less, if you're gonna compile all your debt, right? Not how much you owe, but how much you actually have to pay on a statement on a monthly basis for all of those above, more or less how much you guys remember. We're trying to have a very high level conversation about finances. So that way we can give them an idea and determine together if they're really to take the step of applying for a pre-approval, right? So $5,000 minus any liabilities, more or less how much you said you pay on a monthly basis for those liabilities that you had. Give me an idea, round it up, whatever you guys want to use, whatever you guys feel more comfortable. I like to give examples so that way people start thinking. And they will say, well, between credit cards and the two auto loans, I will say $1,000, right? So now you got to take those $1,000, right? So $1,000, okay, in monthly debt. Line of credit, student loans, auto loans, etc. Right? Now you have $4,000 remaining, and then those $4,000 is what you can use to pay for a mortgage, right? So now you have 4K to be able to pay for a mortgage, right? Now, I don't know if you guys have a mortgage calculator. I think that's a little complicated, but Zillow has a very basic mortgage calculator for you guys to have an idea based on $4,000 how much they can actually afford, right? So I will go ahead and use the 4,000 as an example and then plug it in Zillow. Or whatever application you guys want to have for a mortgage payment, right? Zillow is very simple. It looks like this. You can have it on your phone. It looks, you guys can hear? No, I don't think you guys can see that. Let's see. No, you guys can't see it. Sorry. So a mortgage calculator, I will go in there and then play a little bit with the numbers. You guys want to get a little bit more advanced and technical? I'll give you two tricks. For property taxes, you want to use 1.25 to 1.5 of the sales price, right? For pre-approval purposes. And then for insurance, if it's a single family home, you want to use 0.85 to 1% of the sales price. And if it's a condo or a townhome or a villa that is managed by an association, most master insurance policies are going to cover the unit owner from wall out, and then the unit owner will cover from wall in. So the policy is going to be a little cheaper. So you will use 0.35 to 0.45% of the sales price to quote insurance, to quote taxes. And obviously I would say, obviously this number is not the final number. We need to connect with my lender so that way they can collect documents and finalize a solid pre-approval that can really give us the opportunity to be competitive in this market, something along the lines. So that's taxes, that's insurance. If it has an HOA, you add that up. Just for the sake of the example, I can tell you that with $4,000, so let's do $4,000 for a single family home, right? So can anybody give me an average sales price on their current market for a single family home? What's the average sales price for a single family home in your market? Nobody? You guys with me?
Yes.
Okay. What's the average sales price on a single family home in your market, Natalia?
I was working on it, but
All right, let's use 400,000 as an example, right? Single family home, 400,000, right? Conventional loan putting 5% down, right? Property taxes, we said that it was I'm gonna use 1.25. And then homeowners insurance for a single family home, I'm gonna use 1%, which is 4,000. Right? No HOA,
4,000. Oh my goodness.
yeah, 1%. It's just for pre-approval. Obviously, no, that's another benefit. Thank you for saying that, Natahi. That's another benefit in our team. We actually help your clients shopping around for insurance. Speaking about building relationships, we have great relationships with some of insurance brokers who are really good, and they understand that we're not looking for, all the whistles and bezels when it comes to an insurance policy. We want to make sure that we satisfy the conditions of the lender as far as insurance goes. And then we try to be very competitive, give your clients competitive quotes in terms of insurance. But for the sake of pre-approval, you want to give, an idea. You never want to try to sell a prospect on something that does not exist, right? Because then your credibility is on the line. Now, for a $400,000 home, putting 5% down, which is $20,000, no HOA, right? Your mortgage payment is going to be around $3,600, right? So we could go a little higher than that, right? That's just to give you an idea how much they can actually borrow having a conversation, right? What do you think that some of your prospects will think, knowing that, to give them an idea right on front, and then you don't have to wait to connect them with somebody for them to hear from a third party? We always like to explain to our realtor agents that you guys are the main point of contact of this relationship. This is your client. It's never going to be the bank's client. You guys are our clients, and we got to cater to your business. And if we're not helping you to look like superstars in front of your clients, then what are we doing, right? Because anybody can be a good lender. Anybody could know the numbers and, wait for that agent to bring the loan. But in Bi-City Lending, since we started this business, we've been very big on helping you guys to get more leads, get more relationships, stay busy. And that is where the magic will happen, right? So that's basically an idea about income and that formula. I hope you guys get it, written, so that way you guys can practice it and use it. As far as credit, as a lender, we can tell you that we have mainly all loan programs that are available out there. Been in business for 20 years. PRMG has all loan programs that you can imagine. And then aside from having our own products and services, we have great relationships with some of the top lenders in the industry. So 90% of our loans, we try to close it in-house. We have processor in-house, underwriter in-house, which is very uncommon on lenders. There are a lot of lenders that are direct lenders like us, and they have processing in-house, but they don't have an underwriter in-house. They have to send it to another state for being underwritten. We actually underwrite our files. 90% of our files, we try to keep it in-house. The other 10 is that in the event that for whatever reason, PRMG cannot close that deal, we have great relationship with some of the top lenders. And our goal is to always do our best to close everything that we can, right? And as loan officers, what we try to do is to prevent things to go through a pipeline to a processor or an underwriter of files that we know that are going to be problems or obstacles. So as a loan officers, Dariel, Beatriz, and I, our job in the front end of sales in the loan process is to make sure that we avoid those obstacles being seen by a processor or underwriting, right? But for credit scores, what you guys want to know is that the minimum credit score for an FHA loan is 580. The minimum for a conventional loans, you have two banks, Fannie and Freddie, it's 620. And that's conventional. VA loans, 580, same as FHA, right? And as far as USDA loan, I think it's 620 or 580. Not sure. USDA loan is very uncommon as well. It's a program for rural areas. So the most common ones, the ones that you're going to see the most is FHA, Fannie and Freddie, which is conventional, and VA loans. And then for non-conventional financing, which is people that cannot qualify under the guidelines of FHA and conventional standards, those are non-qualifying loans. Those are not only for self-employed borrowers. You can also do a non-qualified mortgage for a W-2 borrower. What you have to understand about those mortgages is they require a little bit higher credit scores. You can still try to do it with lower scores, no lower than 620, which is the conventional model. But we gotta be logical thinkers, right? It's like credit and mortgages is the same as I'm applying for pretty much anything. Credit cards, auto loans, in a sense. In what sense? It's very simple. Higher your score, the better terms you're gonna get, right? Whatever that means on that particular financial product. I want to make sure that my clients, right? This is the way I should be thinking, right? I want to make sure that my clients get the best terms possible, right? Even if it takes to give them a little bit of more preparation. So sometimes, because of the pressure, personal life, this career, and many other things that we can name here in this call, we allow that pressure to get over us and we get overwhelmed, and we want to push people to do things that they're not ready to do. And then that's just going to hurt us on the long term, because it's all about credibility, right? We probably hear them all the time, people out there saying, well, my previous realtor didn't do this, didn't do that. That does not mean that we're going to try to strive to be perfect, because nobody's perfect, but it's all about putting that client first. And if I can help them and prep them, whatever that looks like, whether it's 60 days, 90 days, 120 days, or even a year, I'm going to make sure that they get, to their goal, putting them first, right? Because they have a market that I don't know what that market can lead me to, as long as I'm professional, honest, and I provide the best service on front, right? So we'll tell agents all the time, take this as an opportunity, not just to put them on such in a plan, because with us, it's either we pre-approve them or we put them on a plan, but that plan, while we working to get them towards their goal, is an opportunity for you as an agent to build a stronger bond, because we all know that there's a lot of real estate agents out there, and they pick up clients because we don't follow up with them, right? So take this as an opportunity to build a stronger bond with your clients. So that's credit scores, credit liabilities, why they're so important, because of your debt to income ratios. What's debt to income ratio, guys? Is very simple. The relationship of how much money I make versus how much money I owe. It can be here, how much money I owe, how much money I make, but the debt cannot be here, right? That's called debt to income ratio. That just basically let lenders know how much of your income are you currently using to pay debt. And then the last one and not least is just assets, So out of those three things, what do you guys think is the most difficult one between income, credit, and assets? Which one do you think is the one that is the most challenging when it comes to working with a buyer that wants to finance a home? One at a time, guys, not everybody.
Oh my goodness. You put it harder for us.
Thank you for being vulnerable. Share with me. What do you think is the hardest part, Natalie? What do you think is between income, credit, and assets? Which one do you think is the most challenging for a buyer?
Income, I think.
Income? Okay.
I'd say,
Yeah.
What about Vanessa?
I'd say credit.
Credit? Okay. Deancy and Eric, I haven't heard from you guys. All right, so credit and income, right? So although all of them are very important, right? If you really think about it, income is something that you can always, help them understand why income is important. We can ask if we can add somebody else into the application. There are loan programs that require no income, no employment documentation, no income documentation, as long as you have a primary. So there's solutions, right? Credit. There are things that maybe when we pull credit, as Dalila and I personally been in the financial industry for 8 years. We used to work for American Express for 4.5 years, and one of the top departments in American Express, selling credit cards to business owners and charge cards to business owners. So we understand credit. So there are things that we can utilize based on our previous experiences to navigate those waters of, pay this here, pay that here. Don't do this, get out of this authorized car, and then your credit will improve this much. They're very minor things, but we also have great partners that we actually use and recommend, and we will never put anybody recommendation representing by Silly Lending unless we know they're good. And we have credit rehab companies that are really good. I understand that maybe some of you guys, when you hear, it's just like when we hear from directly from prospects, that you think that all credit card companies are bad, or credit rehab companies are bad. Although in Florida is very challenging to find one that is good, we have two companies are legitimate good, and we can help them solve some of those issues, right? Things like repos, divorces, charge-off, late payments, disputes, right? Those are called disputes under credit. We have companies that we can help your clients with that, right? So if you really think about it, income and credit are things that you can help them and you can give them a plan, right? Now, for us as lenders, the one that we see that is the biggest struggle on the big scale of things, right? Because there's people that do have money, there's people that do have savings, there's people that do invest, and which is great. But in the big scale of things, the big one that it has the most challenging one is people that we all want to buy a house, right? We all have this thought, this idea, this goal, and we may have income and credit solved, or we may have a plan to solve income and credit, but savings is the most difficult one, guys. I don't follow emotions, I don't follow opinions, I follow stats and statistics. That's what I follow. And it says that, the average family in America, they don't have $2,000 put away. That's just a statistics. When it comes to debt, average household in America, they have 25 grand in credit card debt, right? So for us as lenders, that's the one that we struggle the most. And speaking with people, because everybody wants to buy a house, but nobody wants to pay down payment and closing costs, right? And again, do we have cases in the industry of people putting very little money out of pocket to zero money out of pocket? Yes, absolutely. And a big scale of things, that doesn't happen often. And it really depends on the market. Real estate is very cyclical. Right now, we're in a market where sellers are giving credits. That's a great tip and a great advantage for you guys when you guys are working with buyers, right? We got to go back to the basics. Right now, we're in a cycle where real estate agents, some of the real estate agents that we have in the industry, they have no idea what they're doing, and they given the opportunity to work with a seller and they pricing homes incorrectly. Or some of them is just a personal way of doing business, and they don't want to adjust the price because they rather wait for that buyer that comes and pays them ridiculous amount of money for a home that is not valued at that price, right? So we have plenty of examples, but right now, statistics show that 40% of the transactions that were closed in this past quarter, 47% in the last 60, 90 days, they have those transactions have had seller's concessions, which is seller's credits, whether it's to buy down the rate or to pay for closing costs. So you can't deny the statistics, you can't deny the fact. So it's a great tip for assets, right? Can you actually, give a plan of savings to your clients? Yes. How challenging can that, be? Extremely, right? Because it's a habit, but if somebody is really ready, willing, and able, if it takes them 3, 6, 9 months, 12 months, use that time as an opportunity to build a relationship with your prospects, right? Getting to know them a little more. Another great tip that we like to provide to our agents is, you should know 4 things. If you don't know these 4 things about your prospects, it's an opportunity for you to always practice to get in the habit of getting these 4 things out of your prospects. And it's an opportunity for you to reach out, right? A phone call, a text, or an email. I recommend a phone call. I recommend first, if you can meet them in person, grab coffee. Doesn't mean spend money necessarily, but instead of you grabbing lunch, dinner, or breakfast by yourself, you can be catching up with people that can lend you into a market that you haven't been able to tap in. But there's 4 things that I recommend you guys to know about your prospects, and it's called is the word form, right? The F stands for family. The O stands for occupation. The R stands for relationship. Recreation. Recreation. And then the last one is motivation, right? These are 4 things that I recommend you guys when you're speaking to people. It's also a great opportunity to break ice when you're having a conversation with a cold individual, somebody that you don't know anything about them, right? Family, right? Why family? Do they have family in here? What's their background? How do they get here into this country? Are they from this country, right? Or do they have family in state, in city, or they have family outside of the city, right? Are they married? Are they divorced? Do they have kids, right? All those little details can really lend you into conversation. Occupation, we spoke about occupation when we were talking about income, right? Whether it's self-employed, business owner, or employee. Why are those things important? I want to get to know other people that they normally associate with, right? This is people work in a place where I can actually maybe go and do a home buyer seminar. It's just people work with, maybe people that can go and do equity information, provide, people that own their home, how they can actually leverage on that equity and then invest in a second home, a vacation home, or an investment home, right? Where they now understand the value of having a producing asset for their, generational wealth. If they are a business owner, guys, something that is very big, if they're a business owner, what does business owners have to do in order to survive? They have to prospect, right? They have to market, they have to sell. And what do we have to do in our industry? Same thing, prospect, building relationships, getting to know people, right? And showing a genuine interest on striking a conversation with somebody, not for the sake of selling them something, but to build a relationship. Because that individual may never do business with you, but that individual may introduce you to other people that can do business with you and refer you and so forth, right? Recreation, not everything is work. I really appreciate you guys for being in this call in such a short notice. I really hope I'm bringing you value, right? I hope that you learn 1 or 2 things that can really change your week, your month, and your year. But recreation is also part of the things that we want to know about these individuals, right? What do they do for hobbies? What do they do when they're not working? What do they hang out that I can go and tap in and introduce myself, strike conversations with people, and put in my name out there so that way they can use my services, right? As a real estate agent. Motivation, it sounds cliche and everything, but we want to know what people are doing, right? We want to know what they're working on. Do they have any goals? And it doesn't necessarily have to do with real estate or lending. It could be something that, personally, professionally, maybe they own a house and they're looking for a plumber, they're looking for a painter, they're looking for some kind of service that you can actually come in and say, hey, and be careful when you're doing that, because it can, my hand behind. But if you build good relationship with other people, right, that have other professions, and then you can help them to do business, it's a team collaboration, right? Now they're going to remember you, that they're going to remember that you help them and the potential they will help you back. So those are 4 things that are very big.